Hey everyone, Tom Gentile. I want to welcome you to a very special event I have going on here as we are now crossed past the midway part of September. We are very close to Q4. And as I like to always stay ahead of the pack, tonight I want to talk about Q4. I got a lot of stuff I want to talk about with you. So I'm glad you're here for this exciting event. I have lots I want to talk about, so let me go ahead and get started. Before we get any farther down the road here, let me just say real quickly the disclaimer that's on the screen. I'm going to bring that up, and you could read this in its entirety. All you have to do is pause the recording, all right? So you pause the recording, or you can take a snapshot of this and you can read it. I'm going to mention two quick things, however, before we begin. Stock options and crypto, they have large potential rewards, but they also have large potential risk. And myself and everyone that's part of Tom's Trading Room, Gulfport Analytics, we're here as educators to show you how we spot patterns, how we trade those patterns, okay, how we manage those patterns, etc. We're not investment advisors. We do not give specific trading advice. All right, so I want to talk about I'll talk about a lot of things, but if I were to break it down into three parts tonight, I want to talk about Q4. I want to talk about the upcoming holiday season that is in Q4. I want to show you my setups for the best ETF, the best stock, the best alternative asset using my money counter patterns through Q4. They're not the only ones, but they're ones I'm going to show you for this particular webinar. And I am launching something, and I'm going to be launching it tonight. And it is the first time I've done this in 2025, and it is for the seasonal community. I call it 3 months to 300% with my Money Calendar Mentorship. Okay, it's a 3-month-long mentorship that we are going to be kicking off, and we're going to be kicking it off very, very soon. We're launching it tonight, but we're kicking it off starting next week. I'll tell you more about that as we get to the end of this event. So, let's talk about real quick what I don't do, okay? I've been in this business now longer than I haven't, which really kind of shares my age. A lot of you know me from Optionetics. A lot of you know me from Tom's Trading Room. Some of you know me from the different publishers that I used to work with. And again, this year, we decided to go out and self-publish. So I'm glad for whatever reason you're here, that you are here, and my job is to educate you for the majority of our time together tonight. First thing, I'm not a meme trader. I'm not a day trader. I'm not an emotional trader. I don't trade on hope. I don't trade on think. All right. I don't think something's going to go up or down. I might think something's going to go up or down, but I don't trade off of think because I can't quantify think. So what I do as a trader is I'm a pattern trader. I'm a rules-based pattern trader. It's one thing to find a pattern. It's something completely different to research it, to back test it, to forward test it with real data, and then to trade it once those rules are confirmed, that there is an edge there that you can potentially profit from. So there are several different ways that I trade what's called rules-based patterns, right? Some of them involve trend. The trend is your friend, but not at the end. Some of them are contrarian trading patterns, like channel trading. Some of you know that I channel trade, and darknet is one of the strategies we use. Elliott wave is one of the strategies that I use. All right, I trade volatility. When you trade volatility, you're typically an option trader by trading volatility. Statistical trading is also a way I trade options, but I use the sell side of options to trade statistically. But most of all, what I really started directional trading in, what I continue to do, is in the realm of seasonal trading. So as we get into seasonal trading, you know, the one question that I want to ask and answer to everyone tonight is, what exactly is seasonal trading? So seasonal trading is basically identifying recurring patterns. And these are recurring patterns at specific times of the year. Typically, I can look at a pattern that's a monthly pattern, or maybe a quarterly pattern, or a holiday-based pattern. Now, I don't believe that seasonality uh, is in day trading. All right. I think you have to have, you can find seasonal patterns that occur in a week. I don't really particularly like them either, but I don't believe seasonality is in day. There's not, you can't put the word season and day trading together. Now, what causes seasonal patterns to exist? Well, economic cycles, weather patterns, the way consumers buy, their behavior. Holidays are also giving us seasonal patterns. There are patterns in tax season, right? There are institutional activities that can create seasonal patterns. Earnings can create seasonal patterns, or what happens before earnings or what happens after earnings can cause patterns that are reoccurring. And so these are just a few of the different ways that seasonal trading comes. But again, seasonal tradings are the one seasonal trading patterns have in common is they have a start date, they have an end date. And it's a pattern around those dates that happen over and over again. This is what the money calendar looks like starting on October the 1st. Look at all that green. I took October, that's right here. I took November, right in the middle. There's Thanksgiving Day. I took December, and here's Christmas. And I put all of that together to show you what it looks like for the quarter. There's one yellow spot on this entire screen, and it's still bullish, 56 to 44. But everything else you see on the screen just really just showers us with more bullish opportunities and bearish opportunities. I'm showing you this now because now we need to understand this pattern. And, you can even put it with, you might say, well, Tom, it's easy to know the market's going to go up because the Fed's cutting interest rates. Well, the Fed cutting interest rates, we didn't see that happening every September over the last 9 of the last 10 years. Okay. For whatever role seasonality played, it's not really about the why so much. It's about the recurrence. It just so happens that we got a rate cut and the markets so far have responded positively to that. That's great. That makes me want to lean into this pattern even more. So I wanted to share this with you right off the cuff to let you know, what has got me excited about Q4. All right. And again, what's got me excited about it? What type of stocks, what type of ETFs within this pattern really pop out the most to me right now? I mean, there are so many. There are so many alpha stocks that have just got really good double-digit returns. And I'm not talking about options. I'm just talking about the stock. I just want to share a few with you tonight. But then I want to talk about how you could get access to all this data. You could get access to the scans. You could get access to my trades. You can get access to me, all right, over the next 90 days. But let's talk about some actual opportunities. So the first thing I want to discuss is back to US holidays. Last time I talked about US holidays, if you were with me, was in May. What a great time to get into the bullish environment in the end of May, because if you look at the markets and what they did in June, in the beginning of July, and all the way really till about the middle of July, there were 6 weeks there where the markets just pounded to the upside, and anyone that was on the other side of the markets got their head handed to them. Well, we weren't, because we were talking about U.S. holidays. We were talking about Memorial Day. We were talking about July 4th. We were talking about Labor Day and making sure that the big moves were likely to happen between Memorial Day and about mid-August. And they actually ended up happening between Memorial Day and the beginning of August. I mean, that was where all the money was made, June and July. So it was exciting. It was incredible. We did very well. Okay, what about now? Okay, so fast forward to today. Again, there are still 10 market holidays that we track each year. All of them but Juneteenth have years of data to evaluate for patterns. Now, the theory is, and I'm going to say it again, I'm going to say it exactly like I did in May. The theory is that the markets are typically stronger a week before the holiday. So I debunked that myth back in May. And I also showed you how I trade the holidays. And I'm going to do it again. So let's take a look at the next big holiday, which is Thanksgiving. And so I could go look at Thanksgiving and I could take a traditional plan. And that would be to buy the ETF or maybe buy options on the ETF a week before the holiday and then get out right at the close before that holiday begins. So that week prior to the holiday, that's the traditional trader strategy. Buy that index or that ETF before and get out of it right before the markets close for the holiday. The results, folks, are mixed. Okay? Let me show you how I know this. Because one of the tools at my arsenal is what I call the Money Holidays tool. And the Money Holidays tool allows me to put any stock within my group of stocks right there in the symbol. I can do a look back from a couple of years all the way out to 20. I can put any of those 10 holidays in, and I can say, do I want to look at the markets before the holiday, after the holiday, or through the holiday? And that's what I do. So I went ahead and set this 5 days before. Now, one day after is actual holiday. So I'm just looking at the 5 days before. And I click on the go button. And this is what came up for DIA, which, by the way, is the strongest pattern I'm looking at right now coming into Thanksgiving. Doesn't look that strong here because it shows 5 days before, 4 days before, 3 days before. You get about 70 to 80% results. That's not bad. But if I'm only going to get a 0.27% return, and at the very most a 0.86% return, I think we could do better. So it's not exactly a striking pattern when you're just trying to trade for 3 or 4 or 5 days before the market is closed for a holiday. So just like May, just like July 4th, I'm going to say it again. We looked at, well, first of all, the monthlies, that monthly view, that the last quarter of the year looks very promising, right? As it also did in June and July, coming out of Memorial Day. The holiday trader we just saw was about 70 to 80% accuracy, but the ROI was bad. So if we do the same thing that we did in May, and we simply increase the number of days around the holiday and maybe try to trade in between holidays, is that going to give us a better win rate? And is that going to give us a better return on investment? That is what we're looking to do. So I increased those links, and here's the results of that data dump. Here's DIA. I'm looking back 10 years. I'm still looking back at Thanksgiving, but now I'm going before and after, 30 days before and 15 days after, because I'm telling you, I slid this thing back and forth a few times. This was a good area to be in. 30 days before Thanksgiving, 15 days after Thanksgiving, that puts us right between pretty much you're taking trading days and you're going from roughly October 1st all the way in through right up until Christmas. And here's what we get. Oh, mid-December is actually what we end up getting. So here's what we got. 30 days before and 14 days after, a 7.5% return 90% of the time. And then see 15 days. Now I have 30 and 15 was in second place with a 7.5%. Then there was 30-13, 30-12, 30-11. And these were all 6.98, 6.64, 6.48. Do you see the common denominator here? By taking us out farther than that 5 days before the holiday, we still have one trade. We don't have to turn over. And we have not a fraction of a percent, but many percent return. 6.5 to 7.5% return on those top 5 trades. By the way, all of those trades, those top 5 trades, were buying in 30 days before. Okay, 30 trading days before. And all of the accuracy, 90 to 100% accuracy. Okay, now I think I got your attention. So the bullish pattern is extending through Thanksgiving. DIA trade looks like this. The most optimal one that I found, as close as I could get to tonight's webinar, was September 22nd. That's this coming Monday. Okay. This coming Monday, I'm going to be looking at putting a trade on DIA. Now, I could buy DIA. It's an ETF, and I could buy that for the quarter because I can see behind me here, got a lot of green. But if I really want to optimize this, and I want to optimize the amount of money I'm putting out, the risk, and have myself a much better than a 6.5% to 7.5% return, then perhaps I want to look at options. So yeah, I could buy DIA. Where's DIA trading at right now? I think it was at 462. I think it was close to the close, 462. So that's going to be for 100 shares of stock. That's not going to be cheap, $46,200 for 100 shares. So maybe we spend a little bit less and look for a better return on investment. All right. My holiday action plan looks like this. So Q4 already looks like it's going to be one of the best quarters for the year. There is a 7% projected return between September 22nd and about mid-December, and that puts DIA around 500. So if I could find something to buy where we are now that will profit if we get up into that 490, 500 area, that's what I'm looking to do. So buy DIA, hey, buy DIA. I could expect a 7% return on DIA if history repeats itself, as it has over and over again in the past. But what I could also look at doing is trading call options, and I could look at trading call spreads. And look, we're going to evaluate those. So those are going to be our first two trade candidates for this event. So let me put it all out there right now. The one thing that I love about seasonal trading, and especially the trades, the candidates I get from the Money Calendar, I already have an exit date. That's called the end date of the pattern. And because I'm utilizing something I'm going to show you in a few minutes, all right, it can be the average return that's happened in the past X number of years that you've back tested. It could also be something like a recurring line, all right? And that recurring line could get, with what I'm going to show you, could get even better and better. That could be a projection of where your upcoming pattern is likely to go based on what it has done in the past. So we could use either one of those. A regression line is what I call it. So I know that I have my price projection, my time projection, my price projection. It is a true, I call it the TAP, time and price projection. This is a true TAP when you're using seasonality. So earlier today, the DIA call that I was looking at was, let's just look at the at-the-money call and let's weigh it for risk and reward. So DIA December 19th, that's mid-December, 460 call, was trading around $15.55 there around the last hour to close. Last hour the market was open. If I could get it at $15.55, that's going to result in a $1,555 cost per contract. It seems expensive. If you're, someone that likes trades that are less than $500, you're saying, that's about triple what I'd like to pay. But just because something is expensive doesn't mean it's risky. You have to weigh the risk and reward. And to me, the first thing I want to say is, does it have the ability to double? Does it have the ability to hit 50%? Does it have the ability to hit 100%? Could it go higher? All right. What does 1555 as a percentage of the strike price? So if I'm looking at my strike price of 460, 1555 represents about 3% of that strike price. So we are going to pay 3% to buy the at-the-money call options. So in order for these to double, stay with me here, in order for these to double, if I pay 3% for the call option, I'm looking for the call to move, the underlying to move 6%. Didn't we just say that we were projecting this to go between what, 6.5 to 7.5%? If that's true, and this gets to 500, let's say it gets to 500, the 460 call at 500 is going to have a minimum value of 40 points. That is more than the double. If you paid $15.55 for something that's worth 40, you made much more than a double. In fact, you end up making close to 25 points. 24.45 on risk of 15.55. Let's just all agree it's more than a double. Okay, so that is one of the first two trades I want to show you. Okay. The second, based off of, now, again, this is all based on where this is trading on Monday. I mean, I could jump in and do it tomorrow. It'd be a day early. That's not a problem. But I'm actually going to be doing this, showing the entry and showing how I place the order and how I get out of it. I'm going to be doing that on Monday. So, so we have that. We have the 460 call. Great. What about something cheaper? So what I also do is I like to look at, if I'm going to do a spread, what I like to do is I like to take a look at where DIA, in this case, is right now. What's my target? And I want to be buying. I want to make sure that I'm at or below my target price because I want the market to go through that sell side. And of course, if it's going to go through the sell side, it would have had to go through the buy side before it went through the sell side. So I want to try to take buy a lower strike, sell a higher strike, and put that in between where we are today and where our projection is. And I want to do that for less than 5 points for the spread because that gets me below 5. All right. I found one using the December 19th options that was trading at $2.50 earlier today. Let me share that one with you. So that's a December 19th 464.80 call spread for $2.50. Okay. $2.50 for the 460 call spread. Right. Now, that's interesting because if I got that right, wait. I messed this one up. I knew I had something wrong. I'm looking, what do you mean 464.80? That's not right at all. It's 480. Yeah, I wish. 490. Yeah, that's correct. I was setting this up and going live. I apologize. The 480.490 is what I'm looking at. The 480.490 for 250. So what that looks like is that is a 10-point spread. You're buying the 480, you're selling the 490. There's 10 points between the strike you're buying, strike you're selling. You're paying $2.50 for a 10-point spread, which means your cost and your risk is $2.50. Your reward is $10 minus what you paid, the maximum reward. So there's a possibility that we could get a 3-to-1 here. So let's do some math. The math looks like this. Buying the DIA 460 call is going to cost $15.55, roughly 3%. If we're looking for a 7% move in Q4, that's more than double. The call spread, however, is much cheaper. Okay, much cheaper. It's about, what, 80%? It's less than 80% off. And it has a 3-to-1 reward to risk ratio. That's the RRR. That's what RRR means. All right. So putting all of this together, and what we've done so far is just the ETF. All right. So I've shown you a couple of trades that are literally something that you could do, they could be done tomorrow. I'm going to be doing some stuff on Monday in a live class. And so, and I'm actually going to be looking at, well, where do I get out of these? These are ETFs. Do I treat them differently than stocks? The answer is yes. And so I'm going to be, as soon as I get to Monday while the market's open, I'm going to get in and I'm going to look at this trade. And this is a trade I'm looking to do Monday afternoon. And I'm going to share that with the group. And I'm going to share that with not only that, but what my exit strategy is both the first half of that trade and the second half of that trade, what I'm looking to do, regardless of whether it's calls or whether it is call spreads. Nevertheless, this is something that I'm taking off of the holiday pattern and off of the money calendar. And for those of you that are new to what the money calendar is, it's just a way that I look for short-term, simple stock and ETF patterns. You buy it here, you sell it here. You buy it on one day, you sell it on another day. And from there, I'll then look at trades that have a much higher return potential, like the options. Okay, so I could spend $46,000 on 100 shares of DIA. I could spend $1,555 on a call option on DIA, or I could spend $250 on a call spread on DIA. All of them are bullish, right? They all have different costs. They all have different risk. They all have different break evens. They all have different return on investment when you look at where we are and where the target point is. I'm looking for that target point to be, which is somewhere between 490 and 500 is my target for DIA by the end of the year. All right. Again, all based on this tool that I'm using. Right. I say stock and ETF patterns because stock patterns are probably 95% of what I'm looking for, because, there are, let me mention this. There are how many ETFs out there? There's a bunch. Do you guys know there are like thousands of ETFs, right? I only look at maybe a couple dozen, because all the other ones are high leverage, pro shares, 3X, triple X, shorts, contango spreads, stuff that the longer you hang on to it, the longer your money's being pulled out in management fees and turnover fees. But when I look at the actual ETFs that I trade, the stocks I have are probably better than 90% of them when you look at the basket. So I say that because I find many more opportunities with stocks than I do with ETFs. Here's one I see happening on November 3rd. And the one I see happening on November 3rd is Ulta Beauty. Now, we could all sit here and think about the why. Why does Ulta Beauty go up between November 3rd and, say, the middle of December? Well, holiday season. Okay. What's the old adage? The typical retail store doesn't get profitable until they get into the week of Black Friday. That's when they start to get profitable. That's why they call it Black Friday, because they go from being in the red all year long to going into black, meaning that they're going into profitability. Now, you take a look at Ulta Beauty, and that is, the creme de la creme of Christmas presents, of holiday presents for women. And so they kind of have cornered the market in that area. But regardless of their expected holiday sales, their fourth quarter returns, their earnings, what they expect to earn per share, what I do know is that better than 90% of the time, these guys are making money. There's 1 year in the last 10 years that this did not work. So what we do is, in order to get to this, I start with the monthly calendar. And I showed you the three that we're seeing in October, November, December. From there, I jump down in and I look at a rank. And I look at a rank, and the ranks will, depending on how I sort these, I look at things like total trades. Total trades are what I like to call clumping. So I'm looking over here, and here's a clumping that shows 14 trades on a pattern that's for 52 days. Here's a pattern that is 31 days, but it only had one trade. I like when I see more than one on here, because what it tells me is that there's a lot of seasonality clumping that's happening, maybe a little bit longer trade, maybe a little bit shorter trade. So if I see 14, I like 10, I like 1, I don't care for so much. Here's a 31, 29, 10. These are all things that I like to look at. But I'll look at how long that trade lasts, and I'll look at accuracy, and I'll look at something called power meter, which really tells us whether or not the patterns are really coming into their own. Ulta Beauty, we're expecting a 12% price run during this particular pattern, which again starts November 3rd. So while I can spot the pattern that's happening ahead of time, I don't know what the options are going to be doing on November 3rd. All right, we'll get to that in a moment. But I do notice that this pattern on average has gotten better and better as we've gone from 2015 all the way out here to 2024. I also look at where that stock is now, and it's just coming off of all-time highs. You can see where it was back in April, trading down here in the low threes, and it just came off of an earnings, which sent this stock rocketing down and then rocketing right back up again in the fives. I mean, from the mid 300s to about the low to mid 500s, that's a heck of a run for the last 5-6 months. But it looks like it's just getting started. Now, when November 3rd does come around, what am I looking at for options? Well, I can tell you right now, a $500-something stock, I'm not even going to waste my time with a call. I'm going to be looking to call spreads immediately. And I might be looking at, in this case, when November comes around, a $20 or maybe even a $30 spread from buy to sell. But you know what helps me out is we've got a little tool. So a lot of you have known about or heard about the Money Calendar for quite some time. Let me ask the question here, right? Let me see if I can ask the question here. And looks like I got to turn on some comments. I'm going to do that right now. So comments are now on. First question I have to ask to everybody. How many of you have heard me talk about the Money Calendar on more than one occasion? The Money Calendar, Money Calendar. Maybe you hear about it in a webinar, a live webinar. Maybe you've heard about it on one of my YouTube videos. Maybe you've heard about it when you visit our website or something else. So you got a lot of folks, many times. Yes, me, yes, I use it. So that's a big thing. So there you go. But what about, again, what about, I want to show you something I don't think a lot of you know of. I'm going to hold that for a moment because I did see a comment came in, which was a very, very good one. And it had to do with, could you please go backwards for a moment, show that trade once again. This was the DIA option call spread for 1555, and that was the December 19th 460 calls, trading at $15.55. Okay, it might have been a little too small for some of you to see. And then the call spread was the December 19th 484.90 call spread, and earlier today I was trading around 250. All right, so I want to make sure that I got those for you guys. Because that was a little bit small, and apologize. I just now saw that myself. Okay, so we did some math, and we talked about Alta start date November 3rd. I talked about different ways that we rank, which is great. We talked about the Alta 9 out of 10 pattern that starts November the 3rd. We're looking for a 12% run up between November 3rd and mid-December. And Alta's just coming off of its year-to-date highs. Okay, so now everybody in the room except one person, Tommy, the only one so far that said, no, I've never heard you say Money Calendar before. I want to show you something else. I want to know how many of you know what the MC Trader is. How many of you have heard of MC Trader? MC Trader is not a rap artist, okay? It's not a DJ. MC Trader, I do like that name though. MC Trader. MC Trader is an option scanner that we use for the Money Calendar. What it helps us do, because sometimes we'll get, like you see behind me here, you see a lot of green on the screen. We're going to see a lot of Money Calendar trades that are popping up, and I'm going to want to rank them by a number of different ways. I'm going to want to sort through them. But what I can also do is I can go over to MC Trader and I could say, you do the sorting, you do the ranking, you tell me what out there has the best option picks that by the end of the pattern have the best chance to double. And that's what it does for us. So it allows me to really sift through a lot of the data. I can jump right to the end of the book, which is I can jump right past spot the opportunity, and I can go to, let me see what's creating the best low risk trade right now, and then I'll back up and I'll take a look at it. So it saves me a lot of time. There's a lot of yeses in here, but there's a lot of no's in here for the MC Trader button as well. Now I bring up the MC Trader button because the MC Trader button is going to be the area that I'm going to go and my team's going to go when we're looking for Alta or we're looking for anything on a day-by-day basis to help us get to the end result. All right. So that's the MC Trader button. And again, we're at that point where I can't look at options on something in November, but I'm giving you the Alta pick so that you can look at the options at the end of November. I've got another one that's coming up, and I'm going to give you the pick right now, and I'm going to talk about some ideas I have on how to trade it. And it's not an ETF, and it's not a stock, okay? It's not what you think it is, not a commodity. Well, I guess it is a commodity. It's a digital commodity, and that commodity is Bitcoin. So Bitcoin is one of those assets that I call it a 2080 asset. You know what a 2080 asset is? A 2080 asset is an asset that 80% of the time, it just moves like this. 20% of the time, it's breaking one way or another. And we're looking for that big melt up that has not happened yet. We had a melt up last year after Trump was elected. You saw Bitcoin go from the 60,000, the high 60s. It jumped up very, very quickly. Then came back, then jumped up. It hit 100, came back, hit 109, came back, hit 123, 375, which was the closing high a little more than a month ago, and it's pulled back. And now it looks like it's trying to make another run again. Well, we have a date in the future where we see the seasonality of Bitcoin really starting to rocket. Okay. And what am I going to do when we get into that seasonality? So that seasonality, all right, what I'm looking at is that, think about when you think of BTC, let me ask you, what's the biggest ETF that you think of that's trading right now when you think of Bitcoin? Because I'm bringing this back to the stock market. What's the biggest ETF that's tradable right now on Bitcoin that has options? Anybody want to take a wild guess? Yep. IBIT. All right. We got some astute people in here right now. IBIT. It is the granddaddy of volume. Okay. It's the granddaddy of volume. And so I like IBIT because it is so efficient. And when we get into around the mid-October area, when this thing kicks off the signal, that's what I'm going to be looking at. And I'm going to be looking at the volatility of IBIT, the options volatility of IBIT, and it's going to make me have some sort of decision of whether I'm going to be going in and buying calls or buying call spreads. All right, but that's BTC. And the way I get BTC is I have a tool, just like I have a tool for the holidays. I have a tool for the overall money calendar, and I have a tool for the money calendar options, which is MC Trader. I have a crypto calendar as well that has Bitcoin, Ethereum, and others. We're able to go back, we're able to grab that information and find when the best time to be looking at Bitcoin is, both on the bullish side and on the bearish side. As you can see, a lot of that green on the screen, those little green dots over there, are telling us that things are about to get bullish seasonally for Bitcoin. All right. Here's Bitcoin's chart. The season is coming soon. As you can see here, this just goes back to June. So I wanted to widen this out for all of us to be able to see it. And here's the chart going from 100,000 to 100, almost 124, then back down to 112. Isn't that interesting how it pops down, hits that 50%, then jumps back up again? It did not get above the 124 area. And then it came down, tagged the 61.8% level. Now, I really want to see it get back above 124, and there's a lot of reasons that say that possibly could. Okay, same thing with Ethereum. On my side, I own Bitcoin, I own Ethereum, but I also trade Bitcoin and I trade Ethereum too. And I lean into these things when they have patterns of seasonality. Doesn't matter which one may be the stronger one or the weaker one. As a trader, you don't care. What you care about is when the signal comes, because that's the most important thing as a trader of these assets. As an investor, that's different. So those are what we're seeing in terms of as the Dow, all right? And again, the Ulta Beauty, which is one of the best retail stocks going into the holiday season, and then Bitcoin as an alternative asset. So looking under the hood, I can see the best patterns. They give me entry dates, they give me exit dates, they give me historical probability, they give me performance, and they help me take the guesswork out of trading. So I'm not the meme trader, I'm not the hope trader, I'm not that guy that's eat, sleep, pray, eat, no sleep, pray if it's going the wrong way. So let's do a quick review. For any of you that came in a little bit late, I have a DIA trade. Starts Monday, September 22nd, right? We had both call options and call spreads, and you can check the recording on this if you want to get the details on that. Once again, it's there. Ulta Beauty starts on November 3rd. Because it starts on November 3rd, I don't know what the options are going to be trading at as we get close to November 3rd, but I want to go in and have a look at those. Again, as we hit that first Monday in November, I will be looking at Ulta Beauty, and then I'll get a really good idea of what looks good in terms of options. And of course, Bitcoin, I have that starting soon as well. Now, one of the big things that I brought you guys all together here tonight to understand is that what we are trying to do is we are trying to replicate what happened in May. When I was here in May and I was talking about the SPY in May, and I gave an option trade on SPY, and I even traded it because I did it live, right? The two biggest things that came out of that, other than there were a lot of folks that were there and they took advantage of that bullish opportunity and the bullish months that came after that preceded it. But there were some that didn't. And the two that didn't said, I couldn't make it to the live event. Could you do your events in the evening more? We took care of that question, because here I am at 6 o'clock Eastern time with this broadcast. The second was I would like to spend more time working with you in these, because by the time I did see the recording, I didn't know whether the trades were still good. I didn't know whether the seasonality was still good. So it got me thinking, and I have not done this year, to do something that we're putting on right now, which is a way to get access to my seasonal knowledge, meaning doing live events, live mentoring with you, live trades along with those events, get some software, get some scans, get some alerts, put it all together in a package that we like to call Money Calendar Mentorship. So this is the very first time I am doing a Money Calendar Mentorship, especially the way I'm doing it. This is starting on Tuesday, September 23rd. Okay? Tuesday, September 23rd. Now, I got a bonus for those of you that are interested in this and you act on this here within the next 72 hours. All right, because we're going to shut this down by Tuesday, September 23rd. It's not going to be available. But if you sign up before then, I got a little bonus I'm going to give you. I actually thought about this just before we came live. So what is the Money Calendar Mentorship? It is a 3-month program where you get access to me, you get access to my top scans, you get access to my trades over the course of between now and the end, and as we get to the end of the year. Let me tell you what the details look like. So first thing I'm doing is I'm doing a 3-day workshop. The 3-day workshop is going to be Tuesday, Wednesday, and Thursday, the 23rd, 24th, and 25th. On day 1, I'm going to introduce you all to the Money Calendar. We're going to scan for ETFs. We're going to scan for stocks. We're going to scan for trades. We're going to find trades to place. I'll be looking at that DIA trade again, but I want to look for something else on Tuesday. All right, that's day 1. We're also going to do something called single stock scanning. So single stock scanning is something that I want to teach you, that if you've just seen me with the Money Calendar and you don't know what that is. All right, on day 2, we always do a review of the prior day, but I also want to show you how to adjust the Money Calendar, how I adjust it with time. How do I adjust it with probability settings? How do I adjust it with ETFs versus stocks? How do I adjust it with particular groupings of stocks? And also how to trade the options with the MC Trader, all right, the MC Trader pattern. Day 3, we'll do a review of day 2. Then I'm going to look at holiday patterns, crypto patterns, and of course, how to place orders, entries, and exits with your online broker. Now, this 3 days is just the beginning of the 3-month workshop, because I'll also be doing live webinars over the next 90 days, weekly, where we'll be reviewing the Money Calendar, where we'll be reviewing potential trading opportunities and live trade setups. So if you have Tom's tools, Tom's option tools, or part of our Money Calendar package, good news. I'm going to upgrade you to the latest scans that we have, which include the MC Trader button, the Money Calendar, our Money Holidays button, and the Crypto Calendar. That's going to be all upgraded for those of you that sign up. If you don't have our software, that's okay. I'm going to comp you our software during this mentorship. So that's going to be your Money Calendar software, the MC Trader scan, the holiday and crypto scanners, and it's a full options analytics package that comes along with it. So that's part of the program. How about trading along with me? 90 days of Money Calendar Pro. That is my weekly trade alert service. So you get my best Money Calendar picks each week. Those come with entries. Those come with adjustments. Those come with exits. They come with videos. All right. Every week I do videos on this as well. And there is a cash course that comes along with this and a Money Calendar playbook. Now, some of you already have software. Going to upgrade you. Some of you already have access to Money Calendar Pro. This is in addition to that. So if you want to really learn how to do this on a daily basis and not just get something from me on a weekly basis, but really learn how to do it, okay? If you learn how to do it, then I'm going to give all of you here access to this, not for the 2,300 or so, how much this typically is, but for a fraction of that. All of this is going to be underneath a Money Calendar Mentorship 24/7 members only site. Okay. So the trades that we post when we're together, all right, in the mentorship, those are going to be separate from anything else that I do. All right. They'll be on your 24/7 members only website. So again, this is a Money Calendar Mentorship. I'm doing it once this year. That's it. Okay. Yeah, we're about 3.5 months till the end of the year, but I'm not doing this again. It's going to be a 3-day live workshop. You'll get recordings to the year's end, 3 months of live trade sessions, 3 months of Money Calendar software, the upgraded package, 3 months of the Pro Alert service, access to the members only website. The total value on this, when you put this together, is $2,235. I'm doing it again, a lot less, $395. Okay. I'm doing that because the majority of you in here are already, maybe you're a Money Calendar Pro folks. Maybe you're a subscriber to Money Calendar Pro. Maybe you're a subscriber to my software. So that's how you're getting the special price, because you were invited to this because you are a loyal customer, right? You're not getting it. I'm not doing it for $19.90 or $14.95. I push this down to such a low price because of those of you that are here who are my most loyal members. You know what you got to be saying to yourself, wow, I have the chance now to duplicate what I did back in summer. And if you were with me in summer, then you had to do very, very well during that area of concentration where we had so much green on the screen. But if you missed it, don't worry. Second chance is coming around right now as we're getting a green fourth quarter. So this is the way to join. If you want to join right now, Jay has put a link into those of you that are live with me. Jay's put a link into the area that is in the comment section. All right. If you're watching this on recording, you can see it right below the actual page that you're looking at right now. Or you can take your phone and hold it up to the computer and scan that QR code. And if you do that, that'll take you to that special $395 loyalty discount, right? Couple of quick questions. These are my frequently asked questions. I thought I would ask them and answer them here so I don't forget, because these are the ones we typically get when it comes to things involving a product, or like the Money Calendar or premium product. Do you have to be here live each day? If this were day trading, I would say yes, but it's not. Our typical trade is in the 30-day realm, okay? 30 to 45 days. So if you missed a live session, that's okay. In fact, more than half of folks are not live. Less than half actually attend it live. Most watch the recordings later that evening, and they integrate it into their daily lives. So it's not day trading. You won't be left behind by missing the live events. Number two, what if I'm new to option trading? If you're new to option trading, congratulations. I like to think you're in the right place, right? And I feel, this time in my life, what I really enjoy doing, I don't enjoy going on television, on mainstream media. You rarely see me there anymore. I think it's a waste of my time, and I think it's a waste of anybody's time that's watching mainstream media, because you're really kind of corralled into saying, kind of sticking to that narrative that financial program's trying to put you in. I like what I do now. And so if you're new to option trading, what I'm going to do is, I've got this package, includes the basics to advanced techniques. You get the access to the cash course as part of this package, which will help you as you move along to become an option trader. How much time does this require? So as little as 15 minutes a week, or it can be as much as you like. It depends on how deep down the rabbit hole you want to go. The good news is that with the scanners and the way we've set them up, takes a few clicks to get what most people need in terms of research before they want to move on to trade. How much money do you need? Well, if you're trading a stock, that's going to vary. If you're trading options, I designed my option trades, and I'll teach you how to design yours to be $500 or less. So any account size can be utilized with this particular pattern in our mentorship program. Finally, and this is one that's come up in the past. I've seen what your premium services cost. Why are you doing this one for so cheap? What is watered down about this? There is no watered down. What I want to do is, first of all, we got a lot of folks out there that are loyal to me. So I want to make sure that I really do this for as little as humanly possible. But I want to give all of you out there a chance that have never done a workshop, or never done a mastery course, or never did the partner program with me. And I'm going back to the days before I started publishing. I'm going to give you a chance to get into what I think is the best services that we do, and to be able to put all that into a mentorship for this kind of a cost. I've never done anything like this before. But we're trying to give you kind of a really good taste of what we do. And we think that 3-month mentorship really kind of puts it together for the right price. So There you go. That is my Money Calendar Mentorship. It is now open for seats. Seating is limited. All right. Once the seats are sold out, we're at that $395 price. That's it. Again, Omar, $395. All right, $395. That's what we're doing this for. And it's, again, I've done this for all of you that are watching this. This is your loyalty discount for being with me, whether it has been just this year. Some of you have been around with me with Tom's Option Tools and Tom's Trading Room for 10 years. Some of you have been around with me with Optionetics, which takes us back to the 90s. That's how far I've been doing this. So anyway, I wanted to do something for you and really just kind of put something together here as we go into the last quarter of the year for just an absolutely unbelievable price. All right. Jay, come on down. Got a couple minutes left here if you want to make yourself available. Actually, I think I got to make you available. Is that right?
Yeah, I just tried.
There he is. I'm looking at Jay. I'm like, why aren't you here?
Yeah.
Jay, do you see any questions that regarding the mentorship that
I think your Q&A slides answered most of them. If they're asking the same question, those slides on the replay, they'll have that answer for them. Yes, you're mostly handled. One thing to point out as well, when it comes to the ongoing mentorship, the 3 months, you're going to get the first 3 days with Tom's next week. You're going to have every live session. That same link will be your recording. You'll have access to the tools and the scans. And then what I also do is offer the opportunity is in the next 3 months, for those of you with the tools and the scans, and you're watching the replays, you can ask questions of Tom on those Monday live sessions. But if you have questions prior to that you want to get a hold of me, memberservices@gulfportanalytics.com is the email. And then in that email is the live support number. We're live during U.S. market hours. And if I need to spend time with you on the phone to go over a couple of the navigation of the software, I can't recommend one option. But, if you say, how did Tom find that option trade that he showed on Monday? We can go over that, and I can give you training on that too. You just got to call me and set up the time. If you're paid into this mentorship, I need to schedule around all the different people trying to set up times with me and such, but I'm happy to do that too.
Yeah. Awesome. Thank you, Jay. What time are the 3-day sessions? They're going to be at Tuesday, Wednesday, and Thursday of next week at 3 p.m. So while the markets are that closing hour of the markets is when I want to do the 3-day sessions. All right.
Bill,
I'm getting around trade alert regulations. It's because it's education, Jim. It's not investment advice. I'm not telling you how many contracts you're trading. I'm not telling you what your portfolio management should look like. That's between you and your spouse, you and your investment advisor. I'm just showing you how it is that I trade these, how I set the trades up, how I then trade, and how I execute and manage the trades. But I'm not giving individual investment advice. That's how. All right.
Bill was asking about getting a page not found. So let me type in the URL again.
Yeah, I'm actually going to click on it here. Let me click on it while I'm in front of everybody. Let's see what pops. Yeah, it pops up right away, and it will be a landing page that looks like this. Introduces the Money Calendar Mentorship, 3 months to $300%, and then talks a little bit about what I discussed with everyone so far, what's included in this particular mentorship, and then down here, which is the most important part, which is the regular price and the special offer for those of you that are watching that we've invited to this broadcast. All right.
And Hanley is asking if it's a one-time fee.
Yes.
Yes.
Yeah, it's only a one-time fee. So, all right.
Congrats.
Jay,
thanks for signing up. Good job.
I think unless you have anything else that you see.
Mr. McPeak, we got people signing up, so that 50's going fast there, Tom.
Well, yeah, I mean we're doing this at a price.
Omar, nice job.
Never done before. So, and again, like I said, this is just I wanted to do this I didn't want to wait till the end of the year. The end of the year, the moves that I'm expecting are going to have been made. I wanted to do this now, and let's prep ourselves before even the fourth quarter gets started. And then I'm planning on putting on with the group. I'm going to put on at least 3 trades. More than likely, it'll be about a half a dozen, but I'm going to put on at least 3 trades and show. So the way I do this, guys, is I do this. We're going to spot the trades together. I'm going to show you how to scan, and because I want you walking away knowing how to do all this yourself. But we're also going to highlight a couple of trades. I'm going to look at some that I'm interested in. I'm going to show you those trades. Then in the live environment, I'm going to wait. I'm going to count to 60. It's kind of like we're going to play hide and seek. I'm going to count to 60, and you're going to get a 60-second head start on any trades that I'm looking at putting on. So I'm not front running. I'm back running you. And that's what I tell people is I don't front run anybody, right? I will back run you. So that's what I typically do, back running on any of these trades that I do. So there you go.
Here's a question.
How do we see this information in our email? So what's going to happen, Claire, is when you sign up, you're going to get a welcome email. And that welcome email is going to be a confirmation of you getting the class at that, getting into the mentorship. You are then going to get the links for the private sessions with me, all right, with you and the other students. You're also going to get some information about the alert service and how that's going to come to you. You're going to get information on the live session, how that's going to come to you, and you're going to get information on the software, all right, the software upgrades if you have software, how that upgrade is going to happen. But if you're not, how you get that, how that software is going to be included as well. And here's the other thing I wanted to mention, and I almost forgot. So this Monday, I'm doing a live session, and in that live session, anyone that has signed up, by Monday, you will get the link to the live session so that we're going to start on Monday. We're not going to start on Tuesday. And what's going to start on Monday is that DIA trade that I showed everybody. I'm going to put that together, and that's going to be my case study for Monday afternoon. We're going to be looking at DIA, and I'll know exactly what option trades I want to take, and I will put them together. I will show them to you. I will count to 60. I'll do a dance or whatever, make that time go by, and then I'm going to put that trade in. So I make sure that that those of you that sign up for this, we're going to jump back in and do that once again. Again, all the scanners, all the stuff that is going to be included as well. So we're going to have all the scanners. I'm going to show you how to use. A lot of this is going to be showing you how to use these scans and showing you how to go through and take the data and manipulate the data the way that I did. I had a guy last week, Jay, that said, "Hey, September was red and then all of a sudden it turned green. What did you guys do?" And I'm going to show you what we do. And I'm not trying to make the data agree with me. I'm trying to make the data agree with the markets. And so when you look at the rate cut that was coming, and it was really going to be, was it going to be a buy the rumor, sell the news, or sell the news and buy after news? It looked like it was kind of a sell the news, buy the rumor, sell the rate cut, and buy a day later, because the market's really accelerated to the upside. And I imagine we're going to get a little bit of bobbing and weaving here over the next maybe week or so. But as we get into October, I think that the market's going to clearly start to move higher. The seasonality is suggesting that, and that's what I'm trading off of. Again, it's not again what I think the market's going to do. It's what the data is telling me the market has done, and I want to repeat that process.
Hey, Tom, can you show the scanner one more time?
What scanner?
The code, the scan code for the offer.
Oh, yeah.
Totally would like that from me again.
Let's put that back on the screen, the QR code.
Excuse me, the QR code. Got to speak the lingo, right?
Yeah. Well, I saw scanner. I'm like, yep. So that's
yeah, my bad.
That's it. And if you have any questions that either you're not thinking about, or we're seeing stuff going by really fast that Jay or myself did not answer, then please send us an email, memberservices@gulfportanalytics.com. Jay actually put that in the screen in the chat box there.
Yeah, it's in there a few times. Yep.
So there we go. All right. Well, it is a little after 7 o'clock. I think we'll call it here. So Jay, thanks for coming and hanging out with me
Absolutely
here
happy to help. Look
and
forward to
helping
working with you all.
Yeah, thanks for helping out on the Q&A there. I appreciate that.
Yes, sir.
And everyone else, thank you for joining me. I hope at the very least, we did this in May, and boy, if you missed out on the June and July and coming into August, that was a huge miss. But we are expecting that same kind of move to happen here in October, November, and then coming into to December. As again, no guarantees. I don't make guarantees on anything. As far as where the markets are likely to go. What I do is I simply trade based on rules-based patterns, and the rules-based patterns are telling us that we could be looking at a surprise, the Santa surprise to happen well before the holidays get here. All right. So thank you all very much. Have a great rest of your day, and I look forward to seeing you. I look forward to seeing many of you in our Money Calendar Mentorship for 2025.
Oh yeah, many are already in, and it's I can't keep up all the signups even. This is cool.
That's awesome. Yeah, you're right. It's it's gonna go quick. Thank you all very much. Have a great rest of your day, and we'll see you again here real soon. Bye, everyone.